Good morning, ladies and gentlemen. Welcome to today's 5-Minute Market Maven, where you give us 5 minutes and we'll make you a Market Maven. It's a big week this week. It's an exciting week with this week. It's going to be an extremely volatile and wild road week in the markets. If you don't like that kind of market, this is not the place for you. You can sit on the sidelines and you'll be in a majority. Many of the world's traders and investors are sitting on the sidelines because it's going to be riotous. The UK and Europe is going into major re-lockdowns. It's facing an election with an uncertain outcome for what might be many days or even weeks. There's going to be a lot of volatility and panic. China keeps chugging along and making great improvements. The decline. Well, we're going to look at three assets this morning. We're going to take a look at the FTSE, which we're looking at right now. And again, just for a general review, this is the decline following the immediate outbreak in the West after it leaves China. This is the rebound, about a 50% retake, and this is the continuous decline since then. And while the U.S. Index is largely major, this part is not as declining. It's more upward sloping. But nonetheless, they're turning down the United States too. This is the second sell-off. This is where the market gets to hint. This is where they finally get hip to the idea that the world is being ravaged by this pandemic, and they're selling off, and that includes gold. The safe haven trades are surprisingly. Gold even fell last week. It's so sleepy. So there's a lot of money sitting on the sidelines, and from a certain perspective, this is a great time to buy in. But it's going to take spine, it's going to take stomach, it's going to take a lot of nerve. But if you're a roller coaster trader, you like the volatility, these are the markets for you. So we saw the FTSE down and a continued down slope today in the FTSE. The UK is the mismanagement, the level of mismanagement on a government scale in the United Kingdom is just is on a grand scale. Everything this Johnson government says, it goes backwards on and reverses. It's like a ship without a rudder over there, and the stock markets are reflecting that. So, by the way, which we'll look at in a moment, is cable. Pound dollar is also falling. The pound is getting weak against the dollar. That has to do obviously with a generally strong dollar, but it also has a great deal to do with a generally weak pound. The Brexit talks, God only knows what the Brexit talks. But the best we could probably hope for is that they seem to have made some breakthrough on fishing, which was a big sticking point. But the likelihood that we're going to get that broad Johnson promised deal at the end of December is pretty much zero. We'll get some sort of interim thing that'll make it look good, patch it up so they can sort of keep the real negotiations going on. In the meantime, the economies are going to take serious buffeting because nobody's going to know what's going on. How much does the milk cost to import, to make the cake, to send back to England? It's all way out. Nobody knows anything. Do the car parts cost more or less? Duties, tariffs. It's just a swamp that's going to freeze business in the headlights of the oncoming disaster. And pardon me, the FTSE 100 reflects that. Now let's go to the next asset, which is surprisingly or unsurprisingly, it depends how you look at it, pound dollar. And generally speaking, there's a negative correlation between the pound dollar and the just to make the graphs parallel in time sequence. This is the decline in the beginning of March. This is the rebound. Now the dollar, because of weakness in general, the pound dollar corrected for where it was before, and now it's just slightly below that. But if we drill down a little bit, we see that it's coming down. It's been sloping down because the dollar is getting stronger, the pound is getting weaker. And so this particular trade has been holding on nicely and will continue to hold on nicely until the foreseeable future, until things are getting much worse in the UK now, maybe than they are in other places. Brexit is the looming disaster there. So this double whammy trade, both in the FTSE, both in the pound dollar, are excellent trades because of how the market perceives the UK managing through these multiple crises between the pandemic and the Brexit disaster, which are just magnificently ill-timed. And so those trades are holding up well. And the final trade we're going to look at before we sign off today is oil. oil, because of the really serious declines in projected demand, because as economies slow down, the United States is just getting worse and worse and worse every day. We haven't even seen the worst of it yet, but it's getting worse. Oil is plummeting, and we also had a development today where there seems to be. I'm a little, I bite my tongue saying this because it seems so improbable, but there seems to be some sort of truce in Libya, which is semi-miraculous considering the morass, the political, economic, military, and diplomatic morass that is modern Libya today. Um, they actually seem to have come to some truce, and they're going to start pumping some of the world's highest quality, highest grade premium crude. Libyan light sweet is the champagne of crude oils. They're going to start pumping that into the market, further depressing price. And so the oil short trade is going to be a good trade for at least this week, or at least for the next few days. So that's about it for today, for your 5-minute Market Maven, ladies and gentlemen. This is your host, Seth Julian, wishing you all, ladies and gentlemen, the ability to trade with confidence. Bye bye for now.